Topic discussion tonight: how high will gasoline and crude oil prices go until it really starts cutting into the consumer's pocketbook and the economy? Joining me now, Charles Maxwell, senior energy analyst at Wheaton & Company, and Craig Smith, CEO at Swiss America Trading Corporation and author of the book Black Gold, Stranglehold. Gentlemen, nice to have you with us. Welcome to the program.
Thank you.
So what do you think, Mr. Maxwell? How high will oil go?
Well, there are a lot of people guessing at that tonight, Maria, but the experience of the years suggests a little bit higher, but not a lot higher. I don't think we're looking at $80 or $90 a barrel yet. Of course, in time, we're going to get there. But for now, the fears, I think, of Iran and Iraq and Venezuela and Nigeria and so on come and go and shift. And probably when we get to the later part of the summer, we'll see gasoline prices come back down under, crude prices come back down under $70.
So it sounds like you believe this is all perception and speculation in terms of what is behind this move and not necessarily the fundamentals of supply of oil around the world.
Well, everyone does say that. I mean, that's a very common view, but in fact, these terrible things that are happening on the geopolitical side are happening with such constancy, so continuously, that I think we have to begin to take them into account as a permanent condition. The situation in Iraq and Iran is very difficult for the longer term. And we can't get rid of Chavez in Venezuela,
right.
And the Nigerian situation will go on for many years. So I'm afraid we're just caught in an energy crisis that is perhaps a 50% fear, but it's very real nevertheless.
Mr. Smith, what do you think? Is there any reason to believe that there are events out there that turns this situation around?
Well, gosh, Maria, I wish I could be as optimistic as Mr. Maxwell, and he's very well educated on the markets. He's been watching them since 1957, so I'm sure he's very up on it. But I don't believe that people are taking into consideration the real threat that Iran represents, not just in nuclear, but the whole idea of them being the second largest OPEC producer, fourth largest world producer.
Right.
If you take that out of the equation, Maria, I think the spike prices set by Goldman and some of the others of $105 are a legitimate target. A legitimate target.
Let me ask you, Mr. Maxwell, how soon this situation, in your view, is going to be cutting into the economy's growth? So far, the consumer seems vibrant. We're certainly seeing vibrancy when it comes to corporate earnings. Does this situation cut into that anytime soon?
I don't think as much as I would like, Maria. Why I say that is that we need to begin to change our habits of using this oil to which President Bush says we're so addicted. And frankly, the rising prices have not created as much drop in demand as I would have thought would be normal, and as we've seen in the 70s and the 80s. So something new is happening here, and I think it's plainly this, that most consumers think of the price of oil in terms of gasoline. And it costs about 10 cents a mile to operate a typical car at $2 a gallon gasoline price, and about 15 cents for $3 a gallon gasoline price. And when you throw in your insurance costs and your depreciation costs and everything else, it's about 40 cents a mile to operate a car without gasoline, and then about 10 with $2 gas and about 15 more with $3 gas. And so suddenly we're looking here and we're saying the consumer will have to pay 5 cents more, right, from a base of 50 or 55 cents. It isn't that much. It's only about a 10% increase.
But Maria, I think consumers are not the only issue here. I mean, you've got Federal Express trucks, UPS trucks, you've got garbage trucks. I mean, there are a lot of people that are using fuel, and Merrill Lynch says that every penny increase at the pump we see pulls $1.3 billion out of this economy. That's clearly stripped $100 billion out of this economy in this recent rise. And I don't think we can look at this with the optimism that maybe we've looked at in the past. I think this should promote us to really look at becoming energy independent, as we outline in the book.
Isn't it interesting that all of this talk about gasoline and the impact of this addiction to oil that you mentioned, Mr. Maxwell, has really not boosted the sale of energy-efficient vehicles? Sure, we've seen it a bit, but we're not really seeing Detroit get on the bandwagon aggressively in terms of energy efficiency, and we're not really seeing consumers do it aggressively. Why not?
Well, I think firstly it hasn't hurt them that much yet, but I'm rather with Craig that the pain is increasing and it's cumulative. So I think it will get to us in the end. And secondly, our president is not sounding a note of caution. And thirdly, you know, the oil companies don't tell us that the situation is very serious.
Right.
Like his case, I think the situation is serious and that we will see rising prices essentially until we do make those changes.
All right, gentlemen, good to have you with us. Thanks so much for that smart discussion, Charles Maxwell and Craig Smith. And it was a hike in